Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bearish black crow yesterday, and a really interesting one as well. It was an attempted penetration of the support below, actually the same support that held up the drop in August and also back in March, and that's the 38.2% Fibonacci line of the June 2020 to January 2021 move at 116.94, plus the neckline, currently 116.87, of the August to September 2020 head and shoulders pattern. The market penetrated both and ended up closing right on the 38.2% Fibonacci line at 116.94. We now have support at the August low of 116.62, and then, well, really nothing much until the November 2020 low at 116.02. As for what pattern we seem to be developing, well, we may have formed over June to date a pattern known as cat's ears. Yes, there is indeed a pattern called a cat's ears. If that pattern indeed turns out to be the case, then we could see a move down to the 114.5 area. It is early as yet to verify, and it all depends on what happens in the 116.60 area. Now, so far today, a further move lower, below both the 38.2% Fibonacci line and the neckline, and approaching slowly the 116.60 area. Cable, aka sterling against the US dollar. An indecisive spinning top yesterday, but it was also a bullish thrusting pattern. Quite a mixture there actually. We're still in between. Indeed, we showed the resistance and support off excellently of the overhead broken upper time, currently at 137.27, of the early June to late July bearish shift pitchfork, and the unusual yet key support of the 61.8% Fibonacci line for the whole of the 2016 move at 136.54. Just below this 61.8% Fibonacci line, we have the support of the breached yet seemingly still potent three-pointer uptrend, currently at 136.38. Originating from mid-July. This uptrend along with the end of July downtrend, currently at 138.92, make up the elements of a possible sideways triangle pattern. This is something to watch. Otherwise, we might well remain back within the previously mentioned early June to late July bearish shift pitchfork. I've kept this broken pitchfork on the daily chart as I suspect it may still have a role to play. However, I have some severe doubts about it, and to be honest, I would retire it in a heartbeat if I could find a more satisfactory pattern, which is why I'm looking closely at the previously mentioned sideways triangle. Further below, we have limited supports at 136 and 135.70. Overall, we still have a chance that the whole of the 2021 action may be a double top pattern, Adam and Eve type, though it is becoming more obscure and obtuse as a pattern the more we stay at these levels. So far today, a slightly higher open and a move up towards the upper time without testing it before moving down unsurprisingly towards the 61.8% Fibonacci line. Right now it actually looks like a bearish engulfing pattern. Euro sterling. A counter to the counter combined key reversal down and bearish engulfing pattern yesterday. As I mentioned in my commentary on yesterday, the bullishness that we saw on Friday was very limited, as the close was right on, or just under if you're picky, the very slowly descending medium moving average, currently 85.65. The topside action yesterday was again capped by the upper time of the July to September bearish shift pitchfork, currently 85.89, and the market dropped down through all the moving averages, including the medium moving average, all the way down to the very recent support 85.20. And closing today just under the flatlining short medium moving average, currently 85.46. Overall, the previously highlighted idea of a large right angle broadening formation formed since late May is diminishing as an idea. The breached but unbroken bearish shift pitchfork seems perhaps to be taking over. And so far today, another test down to the 85.20 level, but also another rejection, though not as far as the only as far actually as the short medium moving average. US dollar against the Indian rupee. An outside day yesterday, as the market seems to be summoning the energy for a move, possibly higher, by closing over the flatlining medium moving average, currently at 73.81, and testing the overhead 50% Fibonacci line for the whole of the 2020 move at 73.84, halting finally only just short of the mid-July to date downtrend, currently 73.87, and then the 50% Fibonacci line of February to April 2020 move at 74.26. Now this 50% Fibonacci line is actually in the midst of a congestion zone from August between the lesser Fibonacci line at 74.07 and the other lesser Fibonacci line at 74.46. I have drawn, speculatively, a small late August to September based bullish shift pitchfork to cover the recent action. The lower tine is currently at 73.62, the middle tine is currently 73.98, and the upper tine is currently 74.34. So far today, a slightly lower open, but a strong move higher over the medium moving average, the 50% Fibonacci line at 73.84, the downtrend and the short medium moving average. Prices only slowed after reaching the congestion zone bordered by that lesser Fibonacci line at 74.07. US dollar against the Brazilian real. A fourth bullish white soldier yesterday and a continued follow on to the recent unusual bullish engulfing pattern type. It was also the second consecutive close over the flatlining long moving average, currently 532.85, and the first close over the overhead rising middle tine of the late July to late August bullish shift pitch, currently at 537.55. Additionally, the market tackled the two close together overhead 50% Fibonacci lines, the one for 2021 at 538.46 and the one for the May to June move at 539.28, closing over the first and closing right on the second. And please keep an eye on the bullish shift pitchfork as it continues to perform well, especially I suspect the middle time will. This is the indicator for the gently bullish incentive that has been evident here since the end of August. US dollar against the Mexican peso. A reactionary bullish white soldier yesterday to Friday's bearish gravestone doji. However, the move up was stymied, at least on the closing basis, by the overhead flatlining long moving average, currently 20.10.64. The downside was again protected by the combined flatlining short medium moving average, currently 20.01.89, and the medium moving average, currently 19.99.01, with the congestion below from 2 to 3 weeks ago between 19.85.40 and 19.93.10. Interesting, the last 3 days of last week could have been seen as 3 days in a 4-day unusual bearish concealing baby swallow. However, yesterday's bullish action put paid to that idea. Overall, we still have the June to date action as a possible descending triangle pattern with the upper trend line currently at 28.64 and the alternate baseline in the 19.80 even area. However, please do not forget the main device used to direct this market lower, and also its main attractor, the influential gently declining neckline of the February to March head and shoulders top, currently at 19.65.87. And so far today, an open right on the flatlining long moving average and a move higher over it and towards the first overhead resistance beyond the March to date downtrend, currently at 20.21.54. Thank you for listening. The short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.